Good afternoon, students. Hope you all are doing good, and I hope your preparation is going fine. Welcome to today's Analyst. This is 9th of January 2024, and we are here to discuss important articles from the Hindu and the Indian Express. Now, the handout of this session is there in the description box. You may utilize it to streamline your current affairs preparation. Now, coming to the first topic which we are going to discuss today is related to the recent Supreme Court verdict on Bilkis Bano case. Second topic is in relation to mutual funds. Third topic is related to economic growth trends of India. What has been the trend of economic growth in our country? Fourth topic is related to geographical indication tags, GI tags. Last but not the least is related to Viksit, Bharat, Sankalp, Yatra. So coming to the first topic. The first topic is in relation to the recent Supreme Court judgment or verdict on Bilkis Bano case. Now, Honorable Supreme Court has set aside the release of 11 live convicts in Bilkis Bano case. Now, this is very important for our general studies paper 2. That is why it becomes important for us to study here. Now, in our general studies paper 2, structure, organization and functioning of executive and judiciary is mentioned. In relation to that, this becomes important. Now, coming on to the recent Supreme Court judgment or the verdict. Now, Honorable Supreme Court has struck down the remission which has been granted by the Gujarat government, right? So, Honorable Supreme Court has struck down the remission which has been granted by Gujarat government to whom? To the 11 convicts who are out of jail under this Bilkis Bano case. So under Bilkis Bano case, there were 11 convicts and now they are out of jail because of the remission granted by the Gujarat government. And what this Honorable Supreme Court verdict has done, Honorable Supreme Court verdict has struck down the remission which has been granted to this 11 convicts under this by this Gujarat government. Now, Honorable Supreme Court has also directed the convicts to report to the jail authorities within the span of 2 weeks. Now, first thing which we need to understand here is what is this term known as remission. Now, remission in Constitution refers to the complete ending of a sentence at a reduced point of time. So, completely ending the sentence of a convict at a reduced part of time or at a reduced point of time is what you call as remission. And under our Indian Constitution, Honorable President of India under Article 72 has the power to grant a remission to the convicts. And also the Honorable Governor of the states are having power to grant remission under Article 161 of our Indian Constitution. But one thing which is very important to note here is that the convicts who are serving life sentences, that means those who are having life sentences or convicted and then serving the life sentences, they are entitled to seek remission after serving minimum 14 years in prison. So they'll be only entitled to remission of their sentence after they spend 14 years in prison. And this is only in the case of those who are serving life sentences. But one very important thing which we want to note here is that what are the guidelines which need to be followed while granting remission. So, Honorable Supreme Court in Lakshman Naskar versus Union of India case 2000 gave the guidelines which need to be followed while granting remission. And based on these guidelines only, remission should be granted. So, first guideline is whether the offense done by the individual is an individual act of crime or it affects the society. If it's an individual act of crime and it does not affect the society, remission can be granted. Also, second thing to consider is whether the chance of crime being repeated in future is high or low. If the chance of crime being repeated in future is very low and negligible, in that case remission can be granted. The third guideline is whether the convict lost potentiality to commit any crime. So is the convict having any potentiality to commit the crime? If the convict has lost the potentiality to commit any further crime, then the remission can be granted. This is the third guideline. Fourth guideline is whether any purpose is being served keeping convict in the prison. If a purpose is being served keeping the convict in the prison, then remission cannot be granted. But if there is no purpose being served keeping the convict in the prison after a certain point of time, then remission might be granted. And last but not the least, the thing needs to be considered is the socio-economic conditions of the family of the convict. So convicts' families' socio-economic condition is also a very important thing which need to be considered while granting remission. And all of this was under Lakshman Naskar versus Union of India case 2000. These guidelines were given by the Honorable Supreme Court. Now let us discuss in detail what has been the major highlights of the judgment. Now, under this judgment by the Honorable Supreme Court has said that the Gujarat government is not a competent authority and is not competent to pass the remission orders in this case. Because the trial was held in Maharashtra, not in Gujarat. That is why Gujarat government is not the competent authority. So Honorable Supreme Court said that the order of the Gujarat government for remission, it lacks competence, right? And criminals released only by the state where they are tried. So criminals can be released only by the state where they are tried, right? That is what Honorable Supreme Court has said. So Supreme Court's order of May 13, 2022, according to the recent judgment, the judgment which came yesterday, according to the yesterday's verdict, the Honorable Supreme Court has said that the order which they gave in 2022, in May 13, 2022, was obtained by fraud and suppression of facts. But first thing which we need to know is what was the order which they gave in May 13, 2022. So in May 2022, the Honorable Supreme Court has said that there cannot be a concurrent jurisdiction of two governments on remission. So two governments can't have concurrent jurisdiction over remission. That is Maharashtra and Gujarat. Both can't have concurrent jurisdiction over remission. Only one state needs to have a concurrent jurisdiction. And Honorable Supreme Court in that judgment, May 2022 judgment, said that remissions policy or remissions government remitting a particular convict, it is considered in terms of policy applicable in states where crime was committed. So Honorable Supreme Court said in 2022 that the place where the crime was committed, that state is having the jurisdiction of a remission, right? But now what the Honorable Supreme Court is saying in the recent judgment, yesterday's judgment, that this particular order which we saw, this was obtained by fraud and suppression of facts. And the state where the trial happened, only that state can pass the remission orders, not the state where the crime was committed. This is what the recent judgment said. Now to understand this clearly, I'll explain this one more time, that in 2022 order, the Honorable Supreme Court said that two states can't have concurrent jurisdiction. Only one state need to have concurrent jurisdiction. And which state would that be? The state where the crime was committed. That was said in the year 2022. But in 2024, the judgment which came in 2024, yesterday only, the yesterday's verdict, the Honorable Supreme Court said that this 2022 verdict was obtained by fraud and suppression of facts. And according to the new verdict of Honorable Supreme Court, Gujarat government is not competent to pass the remission orders. Because now according to Supreme Court, remission can be given by a state where the trial was held. So where the trial was held, only that state is the competent authority or is having jurisdiction over remission orders. Now that is what the new judgment says. So Gujarat government, according to the Honorable Supreme Court, Gujarat government should have filed a plea to seek the review of the 2022 order, stating that they are not the competent government. So that is what Honorable Supreme Court has said, that Gujarat government should have filed a plea to seek the review of the 2022 order and should have said to the court that they are not the competent government. Gujarat government is not the competent government in this case. And also Honorable Supreme Court came down heavily against their own judgment in the yesterday's verdict, right? So now we understand that in the yesterday's verdict, Supreme Court has held that Gujarat government is not the competent authority. That is why they have struck down the remission orders of the Gujarat government of the 11 convicts under this Bilkis Bano case. And they have given the time of 2 weeks for those 11 convicts to report to the jail authorities. And also one more thing which Honorable Supreme Court has remarked is that the rule of law must be preserved unmindfully of the ripples of the consequences. So the rule of law is the supreme. Rule of law is the most primest. And it should be preserved unmindful of the ripples of the consequences. So it doesn't matter whatever the ripples of the consequences would be, rule of law should be the supreme and it should be preserved. That is what our Honorable Supreme Court has said. Now coming to the second topic of today, that is in relation to mutual funds. Now mutual funds industry's assets under management have crossed 50 lakh crores in December 2023. So the total assets under the management of this mutual funds industry has surpassed the value of 50 lakh crore rupees, which is a humongous value. And this happened in December of 2023. Now, in relation to that, we need to understand what are mutual funds, what are different securities under mutual funds, what are different types of mutual funds which we have. Now, in relation to General Studies Paper 3, Indian Economy section, mutual funds become very, very important. Now, in order to understand mutual fund first, we need to understand the purpose and the real system of investment, or how investment works. So let's say you are having a source of income, and you are a person with surplus money. That means you are having surplus funds. So your expenditure is less, but your income is more. So you're having surplus funds. Now that surplus funds, you're having in mind that you will invest those surplus funds. Now there are a few options which are there in front of you. You might lend those funds to some, let's say, some people, to some of your friends, and you might get interest in return. So that might be your investment, or you might invest in a business. Or there is also one of the very prominent option these days that you might invest in the stock market. But to invest in the stock market, your capital base or your investment amount should be huge. If your investment amount is very less, you cannot make a lot of returns. And also you must have heard stock market is risky business as well. It is risky as well. A lot of risk is involved in stock market. Your money can be vanished off very quickly as well, right? And you can get the multiple sum of money as well, multiple set of returns in stock market as well, right? So let's say you want to invest in the stock market, but you're not having the gumption, you're not having the guts to invest in the stock market directly because of the high risk in stock market, right? So you need help of a certain professional. Okay, let's say you don't want help of a professional also. Then what you will do is you will go for one more option. That option will be of mutual fund. Now, as the name is suggesting, mutual means a lot of people are creating a fund. And let's say if you are having less capital, less investment potential, 5,000 rupees, 10,000 rupees, 50,000 rupees, 1 lakh rupees. In relation to stock market, this is very, very less, right? So let's say you are having less amount of money to invest. So what you will do is, or what society will do is, they will create a pool of money, right? So they will create a pool of money. That is, they will pool in the money at a subsequent place. So 5,000 pooled by someone pools in 50,000, someone pools in 1 lakh rupees, and they create a fund out of it, right? And that fund, which is made by the pooling of small investors, once that fund is created, right? And that money goes to the fund house. Because who will create that fund? A fund house will create that fund, right? Now that fund house will also hire and appoint a fund manager. Fund managers are nothing but the professionals. So fund managers are nothing but stock market professionals. They are professional investors, are having sound knowledge about the stock market and a very huge experience in stock market. So these funds will be created by pooling in money by small investors, and in that fund house they will appoint a fund manager. That fund manager's role would be to manage the whole of the fund which has been pooled by small set of investors. Now, how will they manage the fund? What they will do is they will take that fund, these fund managers, they will use that fund and invest that fund in securities, stocks, bonds, golds, and variety of other instruments. So in variety of financial instruments, that fund will be invested. So let's say you are having, 1 crore rupees fund, right? Now that 1 crore rupees fund is held by the fund house. That fund house appoints a fund manager. Now that is the responsibility and the duty of the fund manager to invest this 1 crore judiciously, right? And to ensure that this 1 crore gives you a certain minimum rate of return. It can be 10%, it can be 15%, it can be 20% as well, right? So let's say if a mutual fund is there, which is guaranteeing 15% of return, right? Now it is the duty of investor, it is the duty of the fund manager to secure this 15% return on 1 crore rupees. And how will they secure? They will invest this 1 crore amount, some amount in securities, some amount in, let's say, stock market, some amount in, let's say, bonds, buying the governmental bonds, some amount in buying the gold, right? It depends on the type of mutual fund which is there, right? So fund manager will invest the money and subsequently they will generate returns. And once the returns are generated, the returns are then passed on to the individual investors who pooled in money to make this fund of 1 crore rupees. And of course, the return which they'll be getting will be in proportion to the investment which they are making. So if a person is making 5,000 rupees investment, the return would be in relation to 5,000 rupees. If a person is making 5 lakh rupees investment in this 1 crore fund, the return would be in tune to that 5 lakh rupees amount, which is the initial investment. So that is how investors would be able to get returns based on investments which they make in the mutual fund. So mutual fund is nothing but a tool which is used by the individual investors to invest indirectly in the stock markets, or to invest their money and to get assured returns 15, 10, 12, 13% in their investment. I hope this is very, very clear to all of you. Now, what we need to understand is what are the different types of mutual funds which are going on. So, on the basis of investment structure, there are two types. That is open-ended mutual funds, close-ended mutual funds. Open-ended mutual funds are usually the mutual funds where buying and selling of the shares of the mutual funds are open-ended. That is, there is no timeline. It goes on perennially. But closed-ended mutual funds, they are having a time limit. And also, they're having a limit that, okay, at this particular time, the mutual fund will stop buying or selling new shares of the mutual fund, right? So there is a lock-in period in this close-ended mutual fund, right? But in open-ended mutual fund, it works perennially. I hope this is clear. Now, based on the asset class, that is where the mutual fund is investing. Based on that, there are three types. One is equity-based mutual fund. Now, equity-based mutual fund means simply a mutual fund which is investing in the stock market. As simple as that. So if a mutual fund is investing in the stock market and the shares, that is trying to buy equity and then generating returns, that is your equity mutual fund. Now, if the mutual fund is doing the opposite, they are not buying equity, but they are giving debts. That means giving loans. And from loans, they are generating some returns. Now, that return subsequently is passed on to the individual investor. So if the mutual fund is going to the route of debt to generate money, that is, they are giving in loans. From that pooled fund, they are giving loans and then generating income, then generating returns. That mutual fund will be your debt mutual fund. And then there is hybrid mutual fund as well. That means combination of equity and debt. So some portion, let's say 50% of the amount in equity, 50% of the amount in debt. These kind of mutual funds are also there. Then there are mutual funds based on investment objectives. So first is the growth option, which gives a very high rate of return, right? And very, very fast, very, very quickly. Then there are dividend options, where the mutual funds work for a long period of time, gives you dividends on yearly basis, right? That is there. Now, based on portfolio management, also mutual funds are divided. One is active mutual fund, one is passive mutual fund. Active mutual fund, again, very actively, the fund manager, right? The portfolio manager, the fund manager, very actively, they are purchasing or buying or selling the securities. So that means they are very aggressively purchasing and selling the securities of the mutual funds. So that means they are wanting to generate huge returns in short period of time. So aggressively working on the asset class of the securities of the mutual fund so that the returns are high. Then there is mutual fund, which is passive mutual fund. That means they invest money into big companies and then they keep that money for a while. So they are not making recurring changes, or let's say quick changes to the asset class of the mutual fund. They are passive mutual funds. I hope this is also clear to all of you. Now, based on speciality, right? So there are some mutual funds which are indexed, right? That means they are in relation to a particular index. For example, Standard & Poor index, right? Or let's say Nifty index, Nifty 50 index, right? Or let's say Bombay Stock Exchange index, let's say Sensex index, right? So if a mutual fund is tied to a stock index, that mutual fund will be known as index funds. And if the mutual fund in itself is traded in a stock exchange, you call it as exchange traded mutual fund, right? So exchange traded fund, ETFs. If a mutual fund is directly traded in the stock market, that is your ETF. Now then there are sectoral funds as well, that the mutual funds which invest in only particular sector, let's say cement industry or infrastructure industry or energy industry, right? Or FMCG sector, right? So mutual funds which are sectoral in nature, investing only in particular sector and generating returns from it, they are sectoral funds. Then asset allocation funds, that means their main role is to allocate different assets across and then generate returns, then generate money for the investors. That is the asset allocation mutual funds. Then international funds, the funds which are having the pool of investments internationally from different countries, and also their investments will also be international. So they'll be buying securities at an international level rather than at a particular country. So they are the international mutual funds. So I hope the types of mutual funds based on investment structure, based on asset class, based on investment objectives, based on portfolio management, and based on speciality is very, very clear to all of you. Now moving on to the next topic, that is economic growth trends in India. Now CRISIL, a rating agency's report has suggested slower economic growth might persist in India in 2024-2025. Now, according to National Statistical Office, the second half of this particular year might experience a slower economic growth. And according to CRISIL, the rating agency, it says that the slower economic growth might persist for the next year as well. That is for 2024-2025 as well. Now, in relation to General Studies Paper 3, Indian economy and issues relating to it, India's growth trend, economic growth trend becomes very, very important for us. Now, let's see this particular line graph. Now, this line graph shows India's economic growth, GDP growth in the last 5 years. From 2018 to 2022, what has been the growth rate of India in the last 5 years? This is very important for us to understand. So in the year 2018, India's economic growth was 6.5%, right? And in the next year, that is 2019, India's economic growth or GDP growth was 3.9%, right? So this period which we see from 2018 to 2019, India's economic growth was at a loss. That is, India's economic growth lowered down. From 6.5, it went down to 3.9%. So this period we can easily call as the period of economic slowdown in our country. So this period is the period of economic slowdown from 2018 to 2019, right? And from 2019 to 2020, right? So in 2020, we saw minus 5.8% growth rate of our country. That is, our GDP went down, minus 5.8% growth rate, right? And if you remember, this was the period of COVID-19, right? And this particular thing which happened, right, from 3.9% positive growth rate to minus 5.8%, that is negative growth rate, India's economy suffered with a technical recession. So India's economy technically was in a recession, right? Because of the COVID-19 induced lockdown in our country, right? And from 2020 to 2021, in 2021, you will see India's economy bouncing back and growing at a 9.1% rate. So Indian economy bounced back, and this particular period, you can call this period as the period of economic recovery. So this period can be called as the period of economic recovery. And in 2020, this was minus 5.8. In 2021, the growth rate was positive 9.1%, right? Positive 9.1%. And in the year 2022, the GDP growth rate was 7.2%. And this particular period, from 9.1 to 7.2, this period can be called as the period of economic stability. Because recently also, if you see the growth estimates of our country, it is close to 6.5 to 7% for the 2023-2024 year as well. So in 2022, 7.2% was the growth rate. That means that right now, Indian economy is at a stable state. So economic stability is there in our country, right? Now, one thing which is very important to note down here is that during the COVID-19 lockdown, when our Indian economy suffered and went into a recession, and when the subsequent year it recovered, what was the shape of economic recovery which we see? The shape of economic recovery which we see here is what we call as V-shaped economic recovery. And all of this diagram is taken from the World Bank website. So what I'll suggest you is that in your notes also, in your economy notes or wherever you are making notes, you should note down this particular diagram as well. Because in your GS paper 3, if in relation to Indian economy and growth related to Indian economy, if a question comes, you should try to incorporate this particular diagram, because this will fetch you brownie points, good marks in your answers. Right? So I hope that you understood this diagram, and the recovery which India had, this is what you call as V-shaped recovery. That is, Indian economy went down in a year, and in the subsequent year, it bounced back to 9.1% positive growth rate. Right? Now, one more question is that why from 2018 to 2019 there was economic slowdown? What was the reason? So the major reason at that particular point of time was the global economic slowdown. So the global economy was also suffering, and the ripple effects on Indian economy was also seen. And of course, several economic measures, stringent economic measures were taken by the government. So that short-term impact of lower economic growth could be seen from 6.5 to 3.9%. But after that, once the growth rate turned negative, that was because of the lockdown induced by COVID-19. And after that, because of the resilient economy which we were having, we were able to bounce back in the year 2021, and subsequently we became stabilized. So now we are having the period of economic stability. And of course, we are now aiming at a $10 trillion economy, right? And for that, we need to grow at a very high pace. That is more than 8 to 9% per year. Again, which the government is taking a lot of initiatives to do. So I hope this economic growth trends is also crystal clear to all of you. Now coming to the fourth topic of today, that is GI tags, geographical indication tags. Now 7 products recently from Odisha have bagged the coveted GI tag. Right? Now, in relation to your prelims examination, current events of national and international importance, this geographical indication tags becomes very, very important. Now, first thing which we need to know is what is this geographical indication? Now, as the name is suggesting, geographical indication. So, it refers to the place of origin of a product. That means indication of the geographical location of a product. So it's an indication of a geography of a particular product, that is the place of origin from where the product has originated. And it also provides assurance for the product quality. And what is this GI tag, geographical indication tag? This geographical indication tag is a sign which is assigned to a particular product to indicate its geography. So these are the tags which are given to the products, and this tag indicates the geographical location or the place of origin of a product. And it also includes intrinsic qualities of a product. So it is also reflective of the intrinsic qualities of that particular product being based on from a particular geographical location. Now this GI tag, it protects the products from being copied and imitated by others. And you need to register for getting a geographical indication tag, and that tag is valid for next 10 years. Now, what is the legal framework for geographical indication tag in our country? The Geographical Indications of Goods Registration and Protection Act of 1999 and World Trade Organization's TRIPS policy, right? So World Trade Organization's TRIPS policy, it is also indulged in this geographical indication protection. Now, what are the name of the products which have got the geographical indication tag recently? So your Gajapati Date Palm Jaggery, this is the first product. Then your Dhenkanal Magli Laddu, right? This is a laddu which has got the GI tag. Then your Simlipal Kai Chutney of Odisha. So it's a Kai Chutney of Odisha which has bagged the, again, a geographical indication tag. Then your Nayagar Kontal Mudi Brinjal. Right, so this is a form of a brinjal which has got a GI tag. Then from Raigada, it is your Kapada Ganda Dongriya Kond embroidery shawl. So first product is shawl. Another one is painting of Langia Saura, that is also known as your Idital. So one is painting and one is a shawl, embroidered shawl, another is painting. And last but not the least is Koraput Kalajira rice. So it is the form of a rice. So this is your jaggery, this is your laddu, this is your chutney, this is brinjal. It is a painting and then a shawl and then a rice. So all these products from Odisha have recently bagged the geographical indication tag. I hope this is very, very clear to all of you. Now, coming on to the last topic, that is your Viksit Bharat Sankalp Yatra. Now, recently, our Honorable Prime Minister has remarked and has said that 12 lakh new applications were received for the Ujjwala scheme, Ujjwala Yojana, since the start of this Viksit Bharat Sankalp Yatra. Now, this Viksit Bharat Sankalp Yatra is very important in relation to General Studies Paper 2, the welfare schemes for the vulnerable sections of the population by the center and the states, and also the performance of these schemes. In relation to that this Viksit Bharat Sankalp Yatra becomes very, very important. Now, first of all, what is this Yatra all about? So, it is a governmental initiative, of course, taken by the central government countrywide. So, it is a countrywide governmental initiative. And what is the major purpose? To raise awareness about and track implementation of flagship central government schemes. So, flagship central government schemes to raise its awareness and to track the implementation of it. It is mentioned in the syllabus as well, and that is why it is important. So we need to, under this particular Yatra, the government will be trying to raise awareness about their schemes, the central government flagship schemes, and also to ensure and also to gauge what has been the implementation status of the schemes. So to track the implementation status of the schemes. And this includes the flagship schemes, flagship central government schemes like your Ayushman Bharat, your Ujjwala Yojana, your PM Suraksha Bima Yojana, then PM Street Vendors Atmanirbhar Nidhi, PM Swanidhi, and a lot of other central government flagship initiatives. Now, what is the real aim and objectives? What are the stated aims and objectives of this particular Yatra? First is to reach out to the vulnerable section of the society who are eligible under these various schemes but have not yet availed the benefit. So first is to reach out to them and make them avail the benefits of these particular schemes. Second is information dissemination and awareness of these particular schemes so that more and more people join in these particular schemes. Next is interaction with the already existing beneficiaries of these schemes, listening to their personal stories, experiences, and also again tracking the implementation of these schemes, that to what length a particular scheme has been successful. And last but not the least, enrollment of potential beneficiaries through the details ascertained during the Yatra. So to enroll the potential beneficiaries, that means who are eligible to be beneficiary but have not yet taken the benefit. So to enroll them through the details which have been ascertained during the Yatra. These are the aims and objectives under this Viksit Bharat Sankalp Yatra. I hope this is also very, very clear to all of you. So thank you all for watching this lecture, and I hope you have a wonderful day. All the very best to all of you.